Good evening, swimmers. Welcome to our Market Wrap-Up show for Monday, July 21st, 2008. I'm Joe Keenahan, Chief Derivative Strategist with thinkorswim. All right, what we see today in the market is actually kind of a nothing day. We had a little bit of a slow day as the market teetered back and forth. The Dow Jones Industrial Average actually ends up down about 29 points on the day. Kind of a surprisingly slow day almost for the Monday after expiration. The one reason I would say it was slow and may continue to be slow all week, this is a big vacation week. A lot of the traders were out of their positions on Friday's expiration. They got themselves flat, maybe this morning right on the opening, and then it's the rest of the week time to take vacation before we head kids back to school, etc. One of the last weeks perhaps families have together before the fall activities start. So please keep that in mind as you're trading this week. All right, what do we have going on this week? Well, the big news was after the close actually tonight. Apple came out with their earnings. Apple beats estimates on earnings, but their targets going forward do not look good. So what do we do for them? Let's beat them up, down 10 bucks after the close. Be an interesting stock to watch as we trade on Tuesday to see what happens there. What are the other things we're going to look for? Well, one of the big things we're going to look for right now is Beige Book, which comes out on Wednesday afternoon, 2 o'clock Eastern. You want to keep your eyes out for that. Jobless claims on Thursday morning, and then Friday we have durable goods, consumer sentiment, and new home sales all on Friday. So they'll probably really set the tone for what as we will call it, the week that was on Friday afternoon after the close. All right, some of the other indicators we like to look at. Of course, the S&P 500 future, which is closed just about the 1260 mark, but after the close with the sell-off of Apple, trading just below 1250. Still in a little bit of a no man's land. If you remember, though, that 1253 even number was kind of a bigger number as we headed down, so could be a little bit of a resistance number here on the way back up. And the VIX down to almost 23, certainly at the lower end of the range we've seen in a while. So we want to keep our eyes on that. The VIX has been in a pretty tight range really over the last few, let's call it a month and a half or so. All right, other than that, as always, thanks for joining me. Sorry this update has taken so long to get to you. I know we had a little bit of a hiatus. Let's just say it involved lost luggage and a 150-mile car ride. I was John Candy from Planes, Trains, and Automobiles. And I know many of you are saying I'm starting to look a little more like him also. As always, good health, good trading. I'm Joe Keenahan, Chief Derivative Strategist with thinkorswim. Have a great day.